And we are back to War Room ICS number 12. Trainee Alan Vergara. Okay.
Hola.
Hola, hola. How are you, Alan?
I'm good.
Excellent. Excellent. So you see, where's the S&P 500 trading today?
Trading up.
Trading up.
Or down. Yeah.
Trading up. It's trading up. It's making a new all-time high. Yeah, making a new all-time high.
That's on a 4-hour chart or on the daily?
I'm looking at the monthly chart right now.
Oh, okay.
And the new all-time high, 31.77. So as usual, we're going to start with your ICS number 12. We're going to take a look at, today we're going to work on charting techniques, what I use to determine price rotation. And we're also going to work on Trend Fibonacci. Good?
Okay. Good.
Perfect. Now, as usual, we're going to take a quick look at the S&P 500. Last time we were looking at the daily chart. This is what you look at now. And we have these projection from this previous low, Trend Fibonacci, from the low to the known high. We draw at this point. We are applying on the daily chart the 20 exponential moving average. And we noticed that we found support. This is something that we have been doing for almost 2 weeks now, always taking a look at the index to determine the price rotation and what will be the best opportunity for us to go long or call positions. This is very important. The reverse is also true. You need to understand that if you find the S&P, the index, the equity index trading at a high, and after a couple of all-time highs or after being testing resistance for a couple sessions or at least 2 weeks, then you should be prepared to take the other side of the trade. You're looking to buy puts and specific companies that will show weakness on that. Okay, so that's very important. For today as well, I'm going to show a few companies that I will like you to have on your watch list for 2020, companies that we can squeeze a couple times. Every time there's a pullback, we'll be in position to buy call options, and I will share those at the very end of this session. Now, as usual, once you determine this area, you want to find the confluence. Where is the technical support? In this case, we know 38.2, 31.20, confluence with the exponential moving average 20 period. We have it here. Okay, and then of course we have prices breaking above our first target, 31.50. I talked about having a break by the end of the week, a break above, open and close, close and open above this level, 31.50, will deliver more confidence to us that we're in the right direction, and our calls by next week will be absolutely in the money. And that's also something that we have to think about, of course, because at the end of the day, today we have Costco and earnings. Okay, so that's very important to remember. Now, just to, because we're not gonna take too much time today on this. We're just gonna, as usual, do the projection. You take all the area, and then you find the confluence, and the price rejection happened here at 38.2. Excuse me, and we have the projection. Just gonna move it to get more space. So somewhere around 3,200. So we still have another 40 points that may come as a surprise the next day or by next week. Okay. Now we can always remember one thing that I'm going to add a rule, and I'm going to write this on the on your screen. We finish the shape. This is the area we're projecting. There you go. Now, the most important to take note in this is the final rule of Trend Fibonacci. Once the price, okay, and this is crucial to understand, breaks the 0 level, the Fibonacci is activated. It's an active Fibonacci. That means that prices cannot close and open below the 23.6%. Now, what we can see is prices trading again. That shouldn't surprise you. No surprises here. All the way back to 31.32. That will be only 30 points from the current level. And then attack one more time with 70 points, a new all-time high. So we just had an all-time high. don't be surprised next week we have another one, and that could lead to be the last one for the next 4 or 5 months. Very important to keep in mind. Okay. And that will be very important for us, because as we mark this new all-time high, which I see as the last one, maybe I'm not discounting a probability to push 3240. It may happen, but for now we only have on the table the 3200. That's our last goal between now, of course, the Christmas rally. Still, evidently will be something that will take place if finally they announced this, signing a deal with China. They took it today on Twitter. All the information is that President Trump, they delayed the tariffs, and there was another concession, 50% concession on a few items. So that's why the markets went up all the way today, almost 30 points. So to keep that in mind, okay? So we have for the S&P 500, very important to give it a note of it. Now, let's move to what we're going to do today. Now, remove all the notations, clear drawings, and let's work. Now I'm gonna switch screen, and we're gonna go to another platform I have with, let's take a look at, we're gonna study Disney, and I'm going to take a look at Snapshot, because there's a trade here, and we'll have time for Netflix as well. You know, work on Netflix here, both. Okay, so we have now Disney, this area, and Snapshot. Okay, we're gonna start with a common company that you know, Disney. Okay. The analysis I have here, this is the analysis that I shared a couple of times, but no one really pays attention because I don't explain much. You're the first one I'm going to explain. Not even the publisher, he knows I do this. This that you see, yeah, I try to, you have to protect your intellectual property, Alan. So
yes,
I have to do what I have to do. It's just the way it is.
Understandable,
Yeah, but you're the first one I share in English, because I do this with a group of guys in Spain. We're 6 of us, only 6. One programmer, another guy that he does scalping, and a couple guys that they're heavy into trading education. So what you see in front of you is called Wolfe Wave. It's not it's not Elliot Wave. It's Wolfe Wave. There are tons out there of material on the concept. Today, I'm not going to go deep inside, but I'm just going to show you why I use them and how I determine levels. And you will see that is something that you will time, because I will teach you this too. You will be capable to do as well. Okay. Now. Okay. The Wolfe Wave is a pattern that indicates a probability of reversal. In this case, what you see is 1, 2, 3, 4, 5. Those are the 5 points. Now, this point here, it's the edge of a level. What is happening here is that prices are breaking that edge, and they do something which is called the expansion. Okay. Now, the expansion comes with something that we, my group and myself, we label as the little box. The little box is designed to measure risk. Now, as you can see, we have a push. The 0.5 was at $147. Then you have a retracement all the way where? To the 50 exponential moving average. That's the blue average that you see on the screen, okay? On the weekly chart. So it's about $19. Okay? So those $19 are my risk and are my little box, which I have in orange. Now, you can see how prices are sort of in line with the 0.5 here, but they actually look that they're above that. So that means, based on price rotation, that there's an opportunity that this thing easily is going to trend all the way to 166. But that 166 actually up to this level is simple. $19. And those $19 come from the little box. Pretty simple. Okay.
$19 as well.
Exactly. So this is how high Disney will go. I'm not telling you this may not happen. No, this is where Disney is going. Disney is going here. And I know in the industry, analysts and managers, they're not tend to say, oh, we will do this. No, I'm telling you, it will do this. This is why I use Wolfe Wave, because I need to know, like the way I use volume profile is the same way. This is to know exactly where the price is going. Why I need to know this? Why is this important for you as well? Because now you know that the little box here is $19. So if tomorrow morning you see Netflix dropping, which you can see here that there's a battle and I actually can push here, okay? It's on in front of us. You see that there. You see how it's pushing higher. You see the tail, and all the sellers or the short sellers were trapped here, and it's pushing higher. Okay, now, but if as soon as we have probably we'll find a top here, sometime January and from January to February, if you see this rotating lower, coming all the way, you understand that it's a buy. Because you will know, I will send you this chart to your Telegram so you can save it. You know that these companies trading with a little box, $19. So it can drop all the way to this confluence here and still is a buy. That's a value for you, because once you see this happening, what is the first thing you want to do? You want to look for the call.
Yes.
Right away. You don't have no time to waste. And then you know that your targets are what? P5, point number 5, which is 147. And then you will find where it's, so for example, if we were to set a new resistance here, you can be looking for the 147 call. That will be 150. On this one, 153, you will look for the 155. Make sense?
Yeah.
You follow it? Okay.
Yes.
So this is important. This is the power of the
within 10%.
Correct. Wolfe Wave.
Yeah.
The Wolfe Wave already is telling me what will happen. Of course, now, once we have Netflix trading around this price, it can go a lot higher. It depends on price rotation. Because, for example, what I can tell you here is this, also based on price rotation. The little box is, let me take a look. The little box on Disney, as we mentioned, is $19. So then we know that from 0.5, from 147, it has the high probability to go $19 higher. But now then I also know that if I have an open and close above this level, I have another $19 to the upside, because that's the range where I know prices are trading. So from this point, another $19 will be around 186. There you go. And of course, this is the unknown. All this is the unknown. No one is talking about it right now. No one. This is what we call price discovery. When prices get over here, they can start moving sideways, and absolutely, there's an opportunity for Disney to trade 186 within the next 24 months based on there's a deal coming up. Remember, Disney just recently, they getting more than 10 million users on Disney TV, the new streaming service. I have been talking about that for months now. And it's a real threat, a competition to Netflix. It is. So they have a new powerful source of income that will add revenue and a good margin to their operation. They're going to continue as well with Marvel Phase 4, if I'm not mistaken. They started the spin-off of Star Wars, The Mandalorian. So much content, so much quality content coming, and all the deals they have. So there's a lot happening. Plus, of course, remember, you always have Mickey Mouse Company, the parks and everything producing cash over fist. So that's it. Okay. So now you see. Now, the question I'm sure you are asking yourself, so how do I do the Wolfe Wave? The Wolfe Wave is something that I can give you. You will be, again, the first person that will share that software. It's an expert advisor applicable for MT4. So what I will do is I will get to you that. You can use Dropbox or anything, you can get it. And then you can probably open an MT4 demo account in Europe, because they have CFDs. What you see here is not the company itself. It's not the stock trade in the US. It's the European version that they used to trade in Europe. But that's good enough for charting purposes. Okay. Now.
Okay.
Yes.
So
So
if I don't have an MT4, then I won't be able to use the Wolfe Wave.
you can use it, but I haven't seen anyone in the honestly. We have been looking together with my team, the team I'm part of in Spain, and we haven't been able to find anything because mostly they use Wolfe Wave to trade currencies.
Oh.
I'm one of the few to start. I mean, in English, to start using it to trade, to help me to trade equities.
Yeah.
You remember the trade, the McDonald call trade that we used?
Yeah. Yeah.
Part of the shorting that I used was from a Wolfe Wave.
Oh.
I can show it to you.
Can I use Wolfe Wave on TradingView?
We have to look if there's a software available and the quality of the software, because I'm not sure. I cannot really answer that question because I'm pretty sure if there's software, something has been programmed, you can use it, but the thing is to find it. That's the real challenge. Let me just go back.
Or I have Thinkorswim, TD Ameritrade as well. I'm not sure if
no, let me show you. So let me explain you the details. Do you see here in front this Wolfe Wave 04? Okay, this has been coded in a Russian language, which is called MQL for MT4 for MetaTrader. So we need to find if there's someone that actually wrote a code for the TradingView package. That's the challenge. This one I can get it to you. That's not a problem. The thing is that this only works on MT4. That's the thing. Okay. So, but then again, we're always in touch, right? So
yeah.
Plus, you will have like I said, we'll get you the software. Let me just do something real quick to show you about the McDonald's case. Chart. And I throw this here. Okay. Okay, there you go. Do you see this Wolfe Wave here?
Mm-hmm.
That's the one I used to calculate the McDonald call. Yeah. I think you made 100%. One of the paid members in Czech Republic made 210%. Michelle made 100% as well. No, she made 200% as well. So you see, secrets, real secrets. It's the only way. Particularly this one has something that I've been coined with my group. It's Wolfe Wave, a continuation. So you see that there's comes all the way, then comes back, it's sideways. You can see that here. And then you have the price dipping and then comes back and keeps trading higher. This is just a formation for that talks about continuation.
It would automatically appear there.
Yes. When it pop-ups, when I'm looking, for example, the weekends, when I'm looking something to share with all of you, what I do is that I start plotting charts and see if there's something on the screen. When there's the Wolfe Wave, just pop up in front of the screen, and then I go into the analysis, see what's happening or not. But it's automatically. It's already. There's a lot of like technicality behind it, but this is just to show you a way. Okay.
Okay.
Got it. Okay.
Got it.
Perfect. Now we're gonna move to an example of Trend Fibonacci. Now.
Okay.
I like to look at my advice with Trend Fibonacci. This is something that these three concepts, we're going to repeat them all this a couple times this week. Okay, the next couple sessions are going to be about this: price rotation, Trend Fibonacci, Wolfe Wave. So you have multiple sessions where we work together. This is the first one where I'm just sharing you. Tomorrow it's more, or let's work on this together. Now, the most important with Trend Fibonacci is that, remember, it's in the direction of the trend. So if you're picking it when you see prices going up, you take from the lowest point to the highest known. Okay. If the reverse is also true, if prices are going down, you take it from the highest point to the lowest low known, and then you plot. Okay, because prices are going down. In the case of Snapchat, remember, Snapchat is a company that these social media companies are very tricky. And like I used to say, they don't even produce toilet paper. So as I always repeat, there are no Microsoft or Costco or anything like that. We don't really need them, but they're
Mm-hmm.
fun when you can get them at the right price. Right now, if I look at this, we're on the weekly. Remove this. We're on the weekly chart, okay? And what I
Mm-hmm.
notice is that I notice prices bouncing from the 50 exponential moving average, which give us direction. And because prices are trading above this average, we know that we are on the side of the buy. If
Mm-hmm.
prices were trading below the
Mm-hmm.
exponential moving average, well, we are favoring shorts. That's not the
Mm-hmm.
case. Now, I need to know have a mathematical entry, understand what is happening with the stock. So you see, we're coming from what they call in technical analysis, double top,
Mm-hmm.
obviously, and then prices here. This is the key. Prices here, right there. They come, touch, maybe move a little bit below and reversed right away.
Mm-hmm.
And from that point, you see lower highs and new
Yeah.
higher highs. So this,
Yeah.
in fact, this move here tells me that the price wants to start a new bullish run. Now I
Mm-hmm.
need to know exactly how high it can go so I can
Mm-hmm.
allocate risk. Now, of course,
Mm-hmm.
what I did is to take it from the lowest low no, which is this
Mm-hmm.
pullback here. You can see it.
Mm-hmm.
I take my projection, go all the way up,
Mm-hmm.
okay, and then have the levels. It's not a surprise that the level where it bounced is a confluence between the 50 exponential moving average on the weekly chart and
Mm-hmm.
the 61.8% Fibonacci.
Mm-hmm.
It's not a coincidence. There's
Yeah.
confluence.
Mm-hmm.
But of course, no one is paying attention because this requires the work, paying attention, doing the plotting, and follow up.
Mm-hmm.
Now, the key is here. Now it's finding again support at the $14.22. Now,
Mm-hmm.
this is why I took the trade because I know that this 1520 is
Mm-hmm.
not impossible. It's on the table. It can happen by
Mm-hmm.
next week.
Mm-hmm.
So what I said is for you guys in the US, it's easy for us to go with the call options, correct?
Mm-hmm.
So we took the
Mm-hmm.
call. I also explore using a call that was into the cents and can go into 50 cents, which seems not a lot, but it's a couple percentages for us because
Mm-hmm.
we bought at 8, some people bought 6 cents.
Yeah. Mm-hmm.
So it will make us money. It just has
Yeah.
to go to 30 cents and that's it.
Yeah.
That's it. That's
Yeah.
pretty simple. And if it flies away to 80 cents, good for us. Even better. Even
Yeah.
better.
But you said we're looking at targeting 45 cents.
Yeah, that's what I'm
Yeah.
targeting. Will it
Yeah.
happen? We'll see. We're about to.
We'll see.
So far, the
Yeah.
S&P 500 is moving. I think now the snapshot went up to 5 cents again. We'll see how it goes.
Yeah.
We're waiting. We're waiting. Now, of course, now for those in Europe, what I suggested, because I know that the War Room has members in Europe, is pretty
Mm-hmm.
simple. Use this level, 61.8, a little bit below the level. You see this low there? Let me
Mm-hmm.
just clear all the drawings. And I'm going to zoom.
Wait, when do we use the 50 EMA and the 20 EMA? Sometimes we switch back and forth.
Correct. I prefer to use the 20 when I'm working with indexes. Okay.
Oh.
So 20.
Okay, for the S&P 500.
Yeah, or the Dow Jones. It's S&P
Okay.
500
Okay.
or Dow Jones.
But
Okay.
for the equity, we use
For
the 50
equities,
EMA.
yes. You have seen that also on Trading View. On Trading View, I have it that way. When I'm working with the MT4, I use the 50. It all
Okay.
comes what decision. Right now, I want to show you, train you on the 50 because of what I'm
Okay.
doing. So, but also I will
Okay.
explain why I use the 20 to 20. It's more like it's a fast pace.
Yeah.
Exponential moving
Aggressive.
average.
Yeah.
Exactly. So in this one, I want to be more conservative. So the 50 EMA, I use it equities.
For weeklies.
Correct, weekly. My prefer. That's my choice. Now you see the low here of this candle. That it's when we see prices going pushing higher. So of course, I want my stop loss to be below this because this is the known low. I want it to be
Yeah.
below because I'm pretty sure there's a lot of stop losses around this area. And I don't want to be a victim of that. And then, of course, after I have all that information, I take my trade. And as you can see, there's tremendous opportunity to the upside. We're trading at 14.18. We can see easily a 50% push to the upside. Of course,
Yeah.
for those that are in Europe, the first target would be $18 and the second target would be $20.30. This is how I use Trend Fibonacci. And you can see it's pretty simple. What it does mainly, and the number one thing that it helps you with is mapping. You have a map. Because it's not doable for you to say, oh, I'm buying at $14 and it's going to the moon. Snapchat's going to $100. How? How is that going to happen? This Trend Fibonacci gives you logic targets and doable risk levels for you to measure your entry. If it doesn't work, fine. But you have value. You have values that you understand here. And that's the most important. Same. If you when it happens, when you become a trader that you're moving per hand $50,000, $100,000 on every trade, then you need this to have a map. Because the first thing you want to do here is that you want to liquidate positions at $18.35. And then you have to get out of the position. It doesn't matter if it goes up. You want to trade the known. You have to. You need to have something very important, and it's the number one thing on the TV show, Showtime TV show, Billions. You need to have certainty. It's the same certainty that I have when I do my calls. I have certainty when I know that I'm buying according to the rotation of the S&P 500, according to the rotation of the equity. If I align those, I have certainty that I have moved the odds in my favor. If you don't do that, as I said before, I will never get tired to repeat it to you. Your chances to make it happen are slim. Because remember, we don't hit one or two options. We hit multiple options. And it's hit, home run, one after another. This cannot be a coincidence. It cannot be a coincidence. Okay? And it's because we have certainty, and that's how we work. Okay? Perfect. And this is Trend Fibonacci. Now, I'm going to show you a pretty basic example of what I do on price rotation. And it's my favorite victim of the year. It should give you a prize. Netflix. Oh my God, Netflix. I love you so much.
How about Roku?
Roku, I have to start working with Roku as well. I need to really look at Roku.
We missed a big move on Roku.
Yeah. The thing is why you have to be ready. So you tell me, Jose, Roku, let's go for the victim.
I will do that. I will do that soon.
Yeah, Jose, there's a victim here.
I'm getting there.
Yeah, you will wake me up like, Jose, wake up.
Yeah.
We have a victim. There's a victim, Jose.
We have a prey.
Yeah.
Yeah.
We go for it. Yeah. Yeah, I have another team member in India, and he does that with let's see what is. Probably have to do it again. This one on the have to do this one on Netflix again. 1 second. I have the one. We have Intel monthly. No, go back. Intel.
So for the index, we look at the monthly time frame, right?
Yes, I look the index. You always want to look into weekly, monthly. That's where you want to play.
Weekly and monthly. Okay.
Yes.
Okay. For the equities, just the weekly.
Yes. Because you're looking for a multi-week push, either high or lower.
Okay. Not the daily or the monthly, just the weekly.
Just the weekly.
Okay.
Focus your efforts on the weekly.
Okay.
That's where the money is really.
That's for the equities. Okay.
Yeah, let's tell Netflix. Yeah, there's something on Netflix. I'm looking if there's a Wolfe Wave on Netflix. Not really. Well, there's one, but actually, this one in 15 minutes.
That's a Wolfe Wave.
Yes, there's a Wolfe Wave. So we have here, but this one is completed. So maybe we'll come back. Okay, let's work the last 10 minutes on price rotation. There's one thing I have to do here. Let me see, I can put it. Okay, perfect. And I'm going to exponential moving average. There you go. So monthly, weekly, of course, here. Just gonna leave these. We will talk about it tomorrow. You see the reaction of the price?
Mm-hmm.
Remember, this candle last week is where we made the 100%, and there's a continuation then. Okay.
Yeah.
Now let's look at price rotation. Now, where it came from? Why come up with price rotation? And this one is funny. So the real story behind price rotation is that I hit a point of stagnation. It means that I wasn't doing much with my trading, and then I started looking at this relationship between where Ross Gibbons from the Insider Report was, where were we failing with our recommendations. And I noticed that we were failing because we put out recommendations at the high of the equity index. So I said, well, it means that things rotated to the other side. And then what I realized is that there's some different ranges where prices move. And you need to know those levels because it's not really resistance or support. Those are levels set by the smart money, the gods of money. Prices that they establish when they exit positions, millions of dollars of positions that they bought 3, 5, 10 years ago. Depends. So, for example, in this case, in the case of Netflix, these are key levels. And these levels are based, see here, this is a full level, and that level is subdivided into small tranches. It's important to know those levels because, for example, I figured this. Netflix has a full range of $120. But then that level is subdivided into $72. And you can see here, as soon as prices broke this level, let me show you. Okay, as soon as prices broke this level, they move $64, $72, and they bounce back. And then they continue. This level here, this extra that you see here, this is what I call the excess. It's always created by muffle. Missing off. Yeah, missing off. Missing off.
Fear of missing out.
Yeah, FOMO. Okay, FOMO, yes. FOMO. This is why those excesses are created. FOMO, fear of missing out. Why? Because right there, this is the level, and you can see 1, 2, 3. This is monthly, remember? 1, 2, 3, 1, 2, 3, 4, 5. All these are professional money exiting Netflix. Of course, at the high. But this excess, who do you think is part of that excess?
The FOMOs.
The FOMOs, retail traders, because they do have a great track record of buying at the high. That's the track record. That's what they do all the time. They have a perfect track record making the same mistake for as far as we know.
Yes.
And they're trapped because these long tails, those are buyers trapped up here.
Yeah.
And this is why I know as well that prices can easily climb here up because those that bought here, what do you think they will do when prices get over here? They will simply bail out because they will say, well, at least I'm not going to lose everything. So as soon as prices come here, now they get out and maybe prices have a new rotation. And they're out. And then they're like, oh, I'm a loser. Yeah, you are. But it's not because you were born a loser. You made yourself a loser. Not paying attention, not going deep into these topics, these ideas. So that's what price rotation does for me. Right now, if I look at what is taking place, I can tell you what I want to see here is this. Price is going down to 247. That would be a better price for Netflix. But Netflix, remember, Netflix has capacity. And it's a but same like Tesla is a cold company. Cold. So it means that it can bounce here, maybe a little bit here, and then start rotating higher. So once it starts trading above 247, I know that my next target is 306. What would I do as soon as I see that? I look for the call. I look for the call right away. For example, 2 calls to consider. If prices were happily to trade in 2020 one more time at 247, and probably the last time, then what do I want? 247, 10% variation. That will put me at 260, 270. Looking for the 270 call. When prices get to 270, they probably go sideways because remember, that's a 10% up. Now, what would I look? 10% variation. Now I'm looking at the 27, 290, 292, the 300. So you see, market bounces from 250. Then, just to explain, this is 250, the price. Market bounce, okay, looks for a 270. What happened there? Got sideways. Consolidation, of course. And then what's going to happen next? 300 is waiting for us over here. Now, at this level, we need to look for that call and then look for the 300 and then boom.
Yeah.
So you look for your call here and you look for your call here.
Yes. Yes. Yes.
And that's the ability that you have to develop. That's the skill that will put you the money. So
yes,
that's all it is. And you prepare yourself. This is why I share with you those calls, because right now, nothing's going to happen. They probably move. You can probably, I'm not going to die. You can probably make 50% of a few calls if we buy them.
Yeah.
But it's too late. I'm not interested in double digit. I'm sorry, it may sound cocky, but I remember I was in Galway, Ireland, and I met this girl. She's a geologist. Now she lives in New Zealand, and she was working at the time with some sort of project with Google Maps. And she was dating a guy from the CIA. And she told me, look, Jose, there's time to be humble. That time is not now. So basically we said, like, look, if you are hardworking, you're really working on these things, be proud of your work, be proud of the things that you're creating, because no one can take that from you. So once you develop the skills, it's not that you become cocky, it's because that you will develop one thing, and the one thing that will take you home and smile all the way to the bank. Certainty.
Yes.
Certainty. That's it. And the pro guys, the real big money guys that they move $1 million minimum per trade, they have developed this certainty of the tools they use and the strategy that they use, that they only see the pattern and they attack. They don't ask questions. Like I said before, my write-ups are not as beautiful. Maybe I can probably do it. Sure, like Ross Givens, give you the full story, blah, blah, blah. I don't have time for that. I see the pattern, see the position, I shoot. Boom.
Yeah.
That's it. It's a reflex. It's a reflex.
Cut to the chase.
Yeah. It's good. Directly, what we're going to do, who is buying, how much he bought?
Yeah.
3 million. What's the exchange percentage? Oh, 25%. That's a lot. Where's the stock? The stock is here. Find the call that is 10% variation. Boom, ready, let's go. Where's the S&P 500? It's trading lower. Good, let's do it. Simple as that. No time to waste. Okay?
Yes, sir. Yes,
so,
sir.
The lesson of the day. As you develop the skills, you will gain certainty. Certainty equals big bucks.
Big bucks. Money in the bank.
Money in the bank. I thank you for your participation in one more War Room ICS Intense Coaching Session. This is coaching session number 12. We're going to leave it like here at this point, and we're back tomorrow.
Okay.
Thank you, Alan.
Thank you, Jose. Thank you so much.
Talk to you later. Bye-bye.
Okay. Bye-bye.